Good evening, beautiful souls. My name is Profound, and I'm with Profound Thinkers Investing, the show. We're so glad that you're with us today, this evening, this afternoon, whatever time you're watching it. We want to thank you for being here, and we want to tell you tonight is going to be totally exciting. We're dealing with part 3 in our conversation with Dohn Thornton about loan modifications in deed in lieu's. Now, we know that we're in a recession right now, and these are topics that are going to be really important to be knowledgeable about in this coming agenda that we have to face. So what are we going to do? We need to educate ourselves and get ourselves abreast to the situation at hand so we can handle it with the best possible methods. So we have Dohn Thornton here, our short sale expert, and he's going to further enlighten us. Grab your pen, grab your paper, and take notes because this is going to be some rich information that you want to gather, remember, and study again. Thank you for joining us. Enjoy the show. We are facing a negative market, and all of the people that I've heard in terms of real estate investors are pushing the ideal of buying the dip. Is that something that's going to be feasible for profit? And is that something that's going to be an incentive for those who are facing these tough situations in terms of owners? Is that going to be something that's going to be advantageous to both the client as well as the investor?
Well, buying the dip is not going to be advantageous for the homeowners because they're the ones going to take the hits. That's just going to be a situation where, they're going to have to, when they're forced to sell their property at a loss, then they're going to take the loss, and that's just the way it is. Again, the wild card is what happens in November. Okay, if a Republican administration stays in, if the Trump administration stays in, I would be very doubtful there's going to be much in the way of help for the general public in keeping their properties. There's certainly parallels in their economic choices as to what it was under George W. Bush in the last 2 or 3 years of his administration. If a Democratic president gets in, Joe Biden looks like he's going to be the one in. I think you can look to a similar reaction that Obama had in 2008 when he came in, and you're going to start seeing basically a repeat of what happened when they came in and tried to clean up the situation and put more stricter rules for banking and so on and so forth. I'm just worried that by November, it was hard enough in 2008. I mean, I really fear for what's coming. I really do. But in answer to your question from an investor point of view, I have told my people that I work with, I said, we're going to have the short sales are coming back big time. Okay. The problem with the recovery that we've had since 2008 it's very hollow. Okay. The rich have made out very well. The poor have been getting screwed, and the middle class has gotten thinned out. Okay. The people that I knew in 2004, 2003, 4, and 5 who were doing pretty well with maybe, one income earner now has 2 and sometimes 3 jobs. I mean, the husband and wife, they have they both work, and then one of them is working an extra job or something, or they're doing a side hustle, something to keep extra money in, because they were never really able to recover the earning power they had before the crisis. Okay. Right. So most of the real estate that's been bought, especially in my state, in Florida, has been heavy government. That's FHA, VA, and USDA, which means very little money down. All right. So, and we know that most Americans do not have a rainy day fund of savings. Most of them don't even have 3 months worth of expenses. They're paycheck to paycheck. Okay. So what's going to happen when they get laid off and they can't make their mortgage payment? Barring some kind of significant government invest or intervention, on their behalf, they're going to start losing their property. And the government, yes, Fannie Mae and Freddie Mac and HUD have said they're not going to allow any more foreclosure auctions. But they've said nothing about stopping the foreclosure filings. Okay.
So how is that affecting the situation?
Well, what that does, again, it just kind of puts it in limbo. All right. So the people that are in foreclosure right now, that we're facing a foreclosure auction date, that date's been canceled. But that's like a stay of execution, and it's like the governor's saying, I'm going to give you a 30-day stay of execution. He doesn't pardon you, doesn't give you clemency. You're still on death row, and you're just waiting. You don't know when they're going to come back and say, okay, we're going to start executing again. That's the way it is. That's what's happening right now. It's just a stopgap. I would say more of a PR measure, because it's doing nothing to solve the problem on a concrete basis. All it's saying is, we're going to stop the foreclosures. We're not going to kick you out, but you could be kicked out. We could ramp this up in 30 days. Another auction date could be scheduled, and you're out. Okay.
So that gives people time to explore other options. In terms of working with an investor, what would be your recommendations for those people in that situation?
Having gone through this once before, I can tell you that if you're facing the prospect of not having any income for 4 to 6 months, which I think is very, very possible, then my advice would be to do a short sale. I mean, because you're going to get a better deal doing that than you are trying to hang on. And going full circle back to my story, what got me in trouble the first time was I made an emotional decision about a financial matter. Okay. My emotions I'm not going to say I was controlled by emotions, but I listened to my emotions more than my scientific side, my math side. And I never should have bought a property that expensive. When I knew the market was gonna fall. No one knew it was gonna fall that bad, but I knew that it was probably not a wise decision. But I wanted to be next to my kid, and so I made that decision. So many times between 2006 and 2012, I talked to people who told me over and over again, I wish I just would have let it go earlier. I wish I just would have if I knew then what I know now, I would have let it go.
What is the difference between letting it go earlier than waiting?
A lot of people put what they call it. They threw good money for over bad, or I forget the cliche, but they were trying to say they burned through their savings to keep the property going. For example, they sold assets to keep their property going. They maxed their credit cards to keep things going. They kept thinking, let me just get another month. And so what ended up happening was they depleted all their assets to save something that was unsavable. And they ended up losing their house to begin with. They would have been in a much better position had they just, recognized the fact that, it's bad. It's horrible luck that this pandemic had to happen. And rather than just saying, I just need to get going and just make the best I can. And they just decided they wanted to keep their house at all costs because it's their home. See, they were thinking of it as their home, when now they're just thinking of things as an asset, as an asset that's losing value. Okay?
Exactly.
And you've got to take a step away from the emotions.
Right. That's what I was going to say. When it comes to money matters, you can't lead with emotional decisions. It's always going to be a matter of knowing the numbers and thinking from a logical point of view. Yes, we have attachments to things that we've invested our time in, where we've raised our children, where we've seen different things and memories take place. But when we're faced with something like this in terms of the pandemic, we need to think strategically and we need to think ahead of the curve. So now we have a period of time since they put a hold on these foreclosures. to get in contact with people like Dohn and evaluate the situation. So Dohn, tell them how they can get in contact with you if they're faced with that situation.
Well, the best way to get a hold of me is my company is called HB Funding. That's H like hotel, B like Bravo, HBfunding at gmail.com. That's the easiest way to remember it. Email me and we can talk. I only work in Florida, but I have a network of investors all over the United States that I know that are good. I can refer you to some good people if you're not in Florida. But if you're in Florida, I can work with you. I guess the last thing I would say on this matter is that I've already seen people starting to. We're talking from the perspective of a homeowner right now. Let me talk to you from the perspective of an investor. Okay, I'm already seeing a lot of people that were into real estate, but not in it to win it, as you want to say it. Not really. That's not their livelihood. It's a side hustle. It's I'm not quite at the position yet where I'm going to go in full time on this. They're already pulling back from investing. The smart people are already coming to me. I've talked to two companies already that have said we know that it's now short sales again. We want to. We know you're one of the bigger short sale people in Florida. We want to establish a working alliance with you now, and we want to buy these houses that you're sourcing. And so what's happening is that you can move forward with it and recognize the new reality and dive in and change your business model to reflect what actually is happening now, or you can wait 6 months or a year, and then you're going to see what I'm telling you is going to happen already, but it's going to be a little bit late to change. You got to be changing now. Okay?
Yes.
You have to let go of the idea that you can find someone with a house is worth 100 and you think it's worth 150, and you can find a cash buyer to give you $10,000, and you can get that as a wholesale thing. Wholesaling is going to be dead in a few months. It died in 2006. It was dead for a long time. It made a comeback during the recovery, but it's going to die again. It only works in a rising or stable market. It does not work in a negative market, and this market's going to start going down. The question is how stark it's going to be, and the wild card is going to be what government intervention is going to take place. I don't know. Like I said, a lot of it's going to depend on November, but in the meantime, regardless, it's going to be whether it's going to be like this trajectory, it's going to be this trajectory, and but regardless, the direction is down. So short sales are the only way to make money doing real estate investing. Well, you can buy notes. You can buy non-performing notes, but honestly, unless you have $1 million or 500,000 to $1 million or more, you can't do it. You can't buy, the lending institutions are only going to sell major packets. So for most investors, you're not going to make any money on that. It's going to have to be short sales.
Is there an opportunity for multifamily investors in this, since people
absolutely
their home?
Yes, because people are going to be forced to sell, and there are going to be people that make a decision saying, you know what, I want to keep my single family home my home, not my house, my home, but if I have to sell, I'm going to sell this, and they're going to sell their investment properties first. So yes, absolutely, that's going to be a really people who made the big money during the recession in 2008 were the people that bought the properties in the dip. What you were saying, right? They bought when the market started bottoming out, and that's going to happen again. So yes, that will be a very good. I think right now that's not going to happen, but 4 to 6 months from now, you're going to start seeing people sell off stuff quickly, and they're going to have to sell it for lower prices. And people who are willing to put the money into it, yeah, it's a very good thing.
Okay, and so when you think about the investment properties and the multiple properties that people own, does loan modification and deed in lieu apply to those people?
No, deed in lieu is not for multi. Well, I mean, a deed in lieu is set up for single family. each individual lender on the commercial side will make the determination if they want to offer that or not. Usually, typically they don't. Okay, loan modification. Commercial is different than residential. They go about their appraisal practices different. They look at income valuations as far as the worth of the property as opposed to the land value plus whatever someone would pay for it. So their calculations are different. But I would say that in general, the focus is from a government point of view is going to be on single families more so than it's going to be, in my opinion, on commercial. I could be wrong. I'm not a commercial investor.
Even within a Republican administration, you feel that that's going to be the focus?
Um, I think that judging by what happened last time, there was no great emphasis on trying to save income producing properties residentially. That's what I'm saying.
Okay.
Whatever was done, it was done on behalf of the emphasis was on the single family homes, I guess politically speaking.
Okay.
So there wasn't as much of an emphasis politically on trying to save an apartment building, okay, as opposed to trying to save someone's house. Ultimately, nothing really happened on the residential side either. I'm just saying that was the focus.
Okay.
I don't see much lobbying or chance of lobbying being done on behalf of the apartment owners of America. Let's put it that way.
Do you think they're going to be facing tough times as owners of apartment buildings?
I think they're going to see their income. I think what's happening is that we've had a long run here where rents have been rising almost to the point where they're more than a mortgage is for a lot of places.
Right.
The market is going to dictate that they're going to have to lower some of their prices.
Okay.
Because and you're going to see, again, depending on where you're at, this is more of a local jurisdiction, but we've seen that in bigger cities they will do rent control, and so it may be forced upon them.
Wow.
Yeah.
And who is that a state or a federal? That's a state regulation, rent control. That's federal.
In New York, that's a civil. Excuse me, that's a city.
Okay.
It's a city decision. Yeah. So it's this is local politics. It depends on what they want to do in their areas, and so my answer would be that depends on who are progressives, more liberal Democrats. Are they in control of the local government, or is it more Republican? If it's more Republican, it's not going to happen. I doubt it, but it could very well happen, as we see in New York. New York's been a Democratic stronghold for decades, and they have rent control, and other places don't. I don't think Florida has it, because Florida's mostly a Republican state. Right,
and because that's in favor of the investor by not issuing rent control.
Yes, but what some of the proposals I've been hearing on the Democratic side is to greatly expand Section 8 housing, and to apply Section 8 rental type things as well. Again, a lot of the legislation that happened in 2008 and 10, I never thought I was going to see, but it happened because there was a groundswell of people coming against the old way of doing things, and this corporatocracy, as they say. But then then when the Republicans got control of the House and the White House, then it went back the other way. So we're ready for a pendulum back over again, but it just depends. If this continues, I think that you're going to see a Democrats controlling all three powers of the government again. Mm-hmm. What they'll do with it is a different question. I don't know. I don't give political opinions about who I'm for or against. I'm just trying to read the tea leaves here as an investor. Right. And typically, what they will do is they will tend to pass more laws and do things more that are not for the investor. Now, right. Bernie Sanders, for example, was openly campaigning on a 25% tax on flips. Okay.
Wow.
Yes. Now he lost. He's losing. That wasn't very popular. But that's my point: is that the deeper into a hole this economy goes in the next 4 to 6 months, will tell you what the sentiment is going to be in November, and we'll see. I mean, we saw it happen once. You know, we had we had major banking reform. We of course, it got again nullified later, but a lot of progressive things came into being in, oh, not to mention, Obamacare, reforming or trying to reform the medical insurance situation. That and the banking reforms were the two biggest things that he did. So, that was just the financial industry meltdown. If it's the entire, you know, job market meltdown, that's the wild card. I don't know. The
Right.
question is going to be, how bad does it get? And I'm very pessimistic. I think it's going to get bad. I really do.
So now we have the courts issuing a stay of payments, right?
No, no. Which payments? What courts?
As far as foreclosures are concerned?
Oh no, that's not a court issue. That's the Trump administration gave instructions to the Housing and Urban Development Department, which controls FHA, and Fannie and Freddie Mac, which used to be autonomous agencies, but after 2008, they were basically taken into the federal government. So those three entities, anything having to do with government regulation or government insurance and mortgages, they have been told that they are putting a stay on foreclosure sales auctions. That was not done by the courts.
Okay. So the courts aren't involved in this.
No.
Okay. So in terms of how we set that up as an investor, with them having those three entities having a stay of payments,
they control over 80% of the market is being told they can't foreclose.
So how does the investor structure the deal?
Well, there's like anything else in life, it's good and bad. Okay. The good part is that if you're doing a short sale like I'm doing now, I don't have to worry about properties being sold at auction before I can get a deal done.
Right.
Well, that's a good thing for me because it gives me more time. Now, the conversely, there's never any good without the bad. That also puts the fire away from the people's feet to make decisions because they feel like, well, okay, I can stay here forever. At least until they remove the stay of execution, as it were. So that's going to be an interesting dynamic.
So what is the conversation the investor should have with the seller?
Well, this is what we're working on this. We're working on this in real time, okay? Because this just came down about 3 or 4 days ago.
Right.
So this is all new territory for me too. But I can tell you that right now we have almost 100 short sales that are in process.
Wow.
And we have almost 50 of them under contract. So we've not had any seller want to back out because they know that they don't have. They have to get out, and a lot of them have already left their homes anyway, and they want to have some closure.
Don, is this just in the state of Florida? 50 in just the state of Florida?
Yeah, that's it.
Wow. So imagine how the scope of things look countrywide.
Well, I'm a unique investor because I'm one of the few that's been doing short sales from the very beginning, and most people got away from short sales because they don't like them. But I love them, and so we never stopped. But what's going to happen is a lot of investors and a lot of realtors who stopped doing short sales the minute they could because they hated them. Now they're going to be forced to become an expert again because it's only going to be the only way to make money is going to be from a short sale.
So what were the drawbacks that people didn't like about short sales?
Because they take a long time. There's a lot of paperwork involved. There's no guarantee you're gonna make money from it. If you're a realtor and you're gonna spend 6 to 8 months doing a short sale, and there's a very good chance it's not gonna work because the bank is gonna give a value, and they don't know how to do value disputes. They don't know how to counter back at the bank and get a realistic price. They just take what the bank comes back at and they throw it in the market and wait for a buyer. And if it's too high, a buyer's never gonna come. So they're gonna do this for 8 to 9 months or 6 to 8 months or whatever. And at the end of the day, it's going to go to foreclosure auction, or you're going to give up and they're going to let the listing expire, and they will have done all that work for nothing. So in a normal market, what we used to have, they could get anybody who listed their property pretty much had a guarantee he was going to get a commission. Okay, because eventually it was going to sell.
Right.
Okay? Now you can work if you have a portfolio or you have a pipeline of short sales, you may have 10 short sales, but maybe one or two will close. But you've done the work for 10 and get paid for two.
Mm. And
Okay.
you're saying the pay period is taking how long now?
Well, we've done it really well. I mean, we get ours done. We get ours done in 2 or 3 months, but we're good at it. Most
Mm.
people don't know how to do it because they only do it when they have to. They hold their nose and do it when circumstances require them to do it. But most of the time they don't know want to do it, don't know how to do it. They don't take the time to learn how to do it well. I people have asked me a lot, why are you so good at short sales, and I mean, short sales are they really that hard? I come back and tell people a monkey could do a short sale, okay? But only a savvy investor can win the value dispute and create equity in a short.
Mm.
Okay.
That's, yes,
Banks don't give away money. If you
exactly.
don't know how to create equity in your negotiations, you will fail, and they will be a waste of time for you.
So,
And I'm sorry, go ahead.
so we know that you have years of experience. What are you telling the people that you're training and working with in your Facebook group to do in terms of the education to prepare for this dip?
What I'm telling them is that if they live and work in Florida, to joint venture with me, and we will do the heavy lifting on the negotiation side. They should just focus on the acquisition side, referring the deals to us, and I pay them 25% of whatever profit we make on the deal, so they don't have to get down into the mud like we do with the mortgage companies. For people who are out of state, I am offering consulting services to teach them how to build a business like I have, but I will only do that for out of state companies. I won't do it for people in Florida. I'm not going to create competitors for myself in Florida. But if you're in New York, if you're in California, if you're in New Mexico, Georgia, wherever, you want to contact me, I will for a fee. I will help you set up the same business model that I have, and so that way you can learn how to do it. And I'm not asking for a percentage of any deals. Just pay me a one-time flat fee. I'll set it up for you, and I wish the best of luck. And I'll consult with you as much as you need as you get started.
Excellent. That's an excellent opportunity. So we're going to post Don's email down below so that you can contact him for further information about participating in this. I guess we can go ahead and call it a coming recession, right, Don?
I think we're already in a recession.
Yeah, it's pretty much what it is. And so it's not a matter of hopelessness. It's a matter of getting on the right side of the money.
Yes.
So in doing that, we want to contact Don to get more information about his mentoring services as well as his in-state percentage opportunities for short sales. Don, as we wrap this session up, let me hear from you what your final thoughts are about this current economic situation we're facing that you haven't mentioned already. A key point for the people.
The key point that I want to make to people is that it's going to get rough, and that what I hope is that what saved me when I had the worst economic collapse personally in my life was when I was over in Russia working. I was a Russian specialist. I worked over there. I lived over there, and then the market dried up, and I had no skills, useful skills at all in America. And I left my daughter, my son, my wife. I had to leave them over there and come here to find something, and it took me 2 years. I didn't see my family for 2 years.
Wow.
But now I see that it was the greatest blessing in my life, because I swore that I was never going to let my family's future well-being to be dependent on a corporation or another person. Okay, I did not want to be a statistic. As someone saying we're going to downsize or whatever. So out of the ashes can come some incredible entrepreneurial successes. And unfortunately, we get comfortable in what we have, and until we're forced to grow out of our comfort level and try new things. And desperation is a heck of a motivator.
Yes.
And there's going to be lots of money made and lots of lives changed in a very positive way for those who embrace it, and have the faith to continue, because economic principles don't end in a down market, it's always going to be the people who don't quit are the ones who are going to succeed. It's just a new set of rules you have to learn quickly, and then you have to apply them.
Exactly. You took the words right out of my mouth. I love that principle and that idea of approaching it in a way that finds the solution, you know, because in every situation, despite how hard it may be, there's always a solution. And I think that we have done a great job today in providing some information for the people who are seeking those types of solutions. Again, look below and you'll see Don's contact information. You'll find my contact information as well. We're looking to help people who are facing situations like this, whether you're an investor or if you're just a homeowner who is wondering what your options are. Shoot Don an email, shoot profoundthinkersinvesting@gmail email. Like and subscribe to the page, please, and continue watching. Next week, we'll be back with another topic. We'll be with our special reoccurring guest, Don. We appreciate you being here today, Don. It's been great as always. And we thank you for joining us today with Profound Thinkers Investing, the show. Thank you and have a great day. Wow. That's all I can say is wow. Wasn't that some rich information that we received? Let me go over in today's Wisdom Corner what we went over with Don and how much information we gained. We learned what it means to buy the dip. We further learned how this 2020 November election will affect homeowners and investors who might lose their jobs. We learned about whether or not short sales are coming back in a strong way. We also learned what a hollow recovery is. We further explored the state of foreclosures in America today amid the virus. We talked about whether or not people should deplete their savings to save their properties in a crisis. We looked at the wholesale real estate market to see if it was going to be a viable option in the coming economy. We speculated about multifamily markets and whether or not it would change with this economy. We looked at the type of properties and assets that qualify for deed in lieu. We looked at whether or not multifamily investors, that's multifamily apartment investors, would be facing rent control and how the administration affects investments. We looked at the 2010 legislative changes. We explored Bernie Sanders' 25% tax on flips proposal. We did an assessment of the current state of payment orders for foreclosures. We talked about why some people don't like short sales. We talked about winning value disputes and negotiations with banks. We learned that we should always try to be on the right side of money. We explored what financial freedom is. And we learned that out of ashes, we can grow out of our comfort zones. We learned how important it is to embrace the change. And we can always find a solution to any problem that we have. So this 3-part series on deed in lieu and loan modification has been tremendously rich for me. I hope that it has been the same for you. I hope that you go back and rewatch the video. Take account of the Wisdom Corner points that I pointed out and make sure that you take note of where Don discussed those things in the video so that you can process it and understand it to the best of your ability. And when we understand things to the best of our ability, we have a better opportunity to process the information and apply the information. So that's what we're here for. Profound Thinkers Investing. We're simply trying to spread the information that's going to help you the most. So like, share, subscribe, and tell your friends about the channel so that they also can be prepared for any crisis situation that's coming to the housing market. We're trying to help you to be prepared, folks, and we thank you for being here with Profound Thinkers Investing, the show. Have a great evening, day, or afternoon. Bye-bye.